This is Financial Caffeine, where retirement planning finally makes sense. Your advisor thinks the CPA handles the taxes. Your CPA thinks the advisor handles the planning. And guess who pays the price for that disconnect? You. One of the biggest financial risks you face in retirement has nothing to do with the stock market and everything to do with two professionals who are not talking to each other. Your advisor looks at your investments, your CPA looks at your taxes. But your life doesn't live in one silo. Your distributions affect your taxes affect your Medicare premiums affect your cash flow affects your investment withdrawals, your withdrawals affect your RMDs affect your bracket, and all that affects whether you run out of money. If your CPA and advisor aren't communicating, then they're not planning. They're reacting, and you're the one who pays the price. These are 3 reasons why CPAs and advisors rarely coordinate. Number 1, they're paid for different outcomes. Advisors get paid to grow your money. CPAs get paid to file returns. So the advisor says, hey, talk to your CPA about tax impact. The CPA says, talk to your advisor about investment impact. And you end up playing telephone between them. Number 2, they work in different time frames. CPAs work backward, reporting last year. Advisors work forward, projecting the next 20 years. There's no bridge between the two. And number 3, neither owns the entire structure. Your financial life is a system, not a set of parts, but everyone treats it like separate components, and that's a structural failure. When your professionals don't talk, here's what happens. 1, you get hit with preventable taxes. Because the advisor takes withdrawals the CPA could have offset, but didn't know were coming. 2, you trigger IRMAA penalties because the CPA doesn't run a Medicare-sensitive income projection. 3, you miss Roth conversion windows because the advisor doesn't know your true tax position. 4, your RMDs explode in your 70s because no one created a decumulation plan in your 60s. 5, you undermine your estate plan because beneficiary designations and tax strategies never got aligned. 6, you pay for decisions made in isolation every year. Most retirees think they're getting professional guidance, but they're actually getting is fragmented guidance. Let me give you a real example. A couple inherited an IRA worth $740,000. We met with them recently. They had 10 years to empty it. They didn't touch it for 4 years because 1, they wanted to avoid the FAFSA impact for their first child going to college. 2, their advisor didn't coordinate the tax implications. 3, their CPA didn't know distributions were being delayed. And 4, nobody ran a 10-year liquidation math. Now they have 6 years left, and their income is about to spike. Without coordination, every distribution pushes them into higher brackets. IRMAA gets triggered, their Social Security becomes more taxable, and the inherited IRA becomes a tax grenade, all because 2 professionals didn't talk. So here's the truth. You don't need better products. You need better structure. Structure requires cross-professional communication where the CPA, advisor, and planner collaborate. It also requires a withdrawal hierarchy, not based on guessing, but based on bracket management, IRMAA thresholds, RMD runway, capital gains planning, estate objectives, and tax engineering, which is understanding the sequence of your high income versus low income years, as well as a plan that integrates both growth and distribution. Most advisors only show accumulation. Retirement is 95% distribution. And finally, a financial architect, someone who sees all the moving pieces in your life, not just one. Inside our Financial Caffeine workshop, we show you exactly how to fix the CPA advisor communication gap so you stop paying for siloed advice. It's free, practical, and there's no sales pitch. The link is below. Be looking for my next video, the IRA 401k tax bomb, how your future self gets crushed. If you want a retirement plan that finally makes sense, subscribe and join the free Financial Caffeine workshop below.